As your tax situation becomes more complex, it can introduce a lot of gray area, and people legitimately worry about if they're going to go to jail.
So that's Mark from the YouTube channel Not Your Dad's CPA. He's a former reseller turned accountant who's been helping other resellers file their tax returns for over 2 decades. And in today's episode, we're going to tackle one of the most confusing and intimidating parts of selling on eBay: taxes. Hey, if we haven't met yet, my name is Justin and I've been selling on eBay for over 26 years, but taxes are a tricky subject and I am far from being an expert. So for some help, I invited Mark to help us navigate the maze of eBay tax reporting. And don't worry, you won't go to jail for making a mistake on your taxes.
Innocent mistakes are not considered fraudulent.
In this episode, you'll learn the 5 simple steps to be tax ready in 2025.
If you could only tell me one thing, that's important that I should do, what would it be?
What to do if you haven't kept good records.
That's a situation that a lot of resellers find themselves in.
How much of your profit you should be setting aside for taxes.
There's kind of a rule of thumb that says you should set aside about 30%, but that's not going to be true for everybody.
Whether you should form an LLC for your reselling business or not.
A lot of people think if they form an LLC, they're going to save a lot on taxes, but
how to define your inventory costs for personal items you're selling.
First of all, I don't remember what I originally paid for it. I don't know that original cost. And second, how do I determine the market value?
What to do if you buy inventory from places that don't give receipts.
It's really not as big of a deal as some people think.
And a lot more. While Mark and I strive to provide accurate information here, the fact is taxes can often be very specific to the individual. This video does not have specific tax or financial advice tailored to your situation, so you should always consult with a qualified tax professional who knows your unique circumstances before making any tax-related decisions. So with that out of the way, let's jump into those 5 simple steps to be ready for tax time.
Yeah, the first one, it's first because it's if somebody said, if you could only tell me one thing, that's important that I should do, what would it be? And it's pretty simple, but it's really important. And that is to just separate your business activity from your personal activity. You don't even necessarily have to have a separate business bank account if you're a sole proprietor. It just should be a separate bank account that you only use for your business transactions. So that's the one you link your credit card to that you use for your business. That's the one that you direct your payouts to, and all the platform fees. Just keep it separate, because then at the end of the year when it's tax time, you don't have to go through your bank statement and try and pick out all the business transactions and be like, was that business or was that personal? It just makes it a lot cleaner. Helps you start on a much cleaner foundation. It's helpful to have bookkeeping layered on top of that. But even if you don't have that piece, having everything separate is going to make it a lot easier at the end of the year to throw that all together.
So aside from separating your banking, I guess 1 of 5, what else? What comes next?
So the next one is that more formal bookkeeping piece where you're tracking your income and expenses, whether you're doing that on a spreadsheet. I've even had clients do that with a pencil and paper.
What if I'm a reseller and it's like, right now it's January and I know tax time is coming. I haven't done anything yet. I was just like, what do I do if I haven't tracked anything yet, if I haven't kept good records, what do I do right now?
Yeah, that's a good question. And that's a situation that a lot of resellers find themselves in. That's all good information for going forward. But what about me? I haven't done any of that stuff in the past. My main advice is just to take it one piece at a time. So you're trying to put together a summary of your income and expenses for the tax return. That's the big picture. So where do you get those? So start with your income. You can typically get your income from the sales reports that the platforms provide. Some platforms have reports that are better than other platforms, but like eBay, they have a few different sales reports you can run for the entire year. And that's where you can get your sales, even if it's not 100% exact, because even internally, some of those reports don't line up with each other. But it's better than nothing just to choose one of those and to get your income from there. Usually it'll show your returns. And then you can also get your platform fees, shipping fees, eBay fees, Poshmark fees, Amazon fees, whatever it is, from those same reports. So then you'll have all of your platform generated income and expenses accounted for. And then you've probably purchased software subscriptions or supplies or different office expenses or contractors. You likely have a record of those somewhere in bank statements, credit card statements, maybe a PayPal statement. It just depends how you've been transacting so you can go back and look through those records.
This is like one of the big reasons why we made Flipwise in the first place, because finding your data, your income and expenses, from all these different places is just really difficult and confusing. So we work to like bring all those together into one central place to make tax reporting super easy. But on those expenses, just talking about expenses, like what are some of the lesser known expenses that people don't typically write off that maybe they should be?
Yeah, expenses that people often miss would include like the home office deduction. And a lot more people are aware of that these days just because so many people work from home, but a lot of people don't know about it. And a lot of people are scared to take it because they've heard that it's a red flag or something like that. But it's really not. It's a deduction that enables you to deduct the business portion of things like your utilities and your mortgage interest or rent, your property taxes. So that's a really good one for a lot of resellers to take advantage of. Another one that people sometimes miss would be like their cell phone. They don't know that you can deduct the business portion of your cell phone because a lot of people are using it to take pictures, to list, to make videos, to look up sourcing information. So you have to determine a business portion that you're using your phone, a business percentage that you're using your phone for, and apply that to the total cost.
So can you write off like the total investment that you like to purchase a phone, as well as the ongoing like monthly fees to a carrier like AT&T? You can write off both of those, some percentage of them based on how much you're using for business purposes.
Yep, exactly. So if you use it 60% for business, you can also write off 60% of the actual cost of the phone.
Yeah. And how rigorous do you need to be about, what does 60% mean? Should I be tracking all my time that I'm using versus personal time, or how do you quantify that?
Yeah, that's one I feel like the IRS is kind of lenient with. They don't have any like stringent guidelines on that. And that's not something that I feel like is really even auditable. Yeah, I think you just have to estimate, say like if I'm on my phone on average, 5-6 hours a day, I know that 3 of those I'm using it for business. So that's 50%,
Yeah.
over the course of the year. So I think if you're 80-90% accurate on that one, it's pretty good.
So I think resellers end up sourcing a lot of things in different places, and some of those places produce paper receipts that are pretty easy to keep as a record of how much you paid for an item. But a lot of places just don't. If you're going to a garage sale, you're not really going to ask the host of a garage sale to write a receipt for you. So, what does someone do in that situation when there is not a receipt given to them for the purchases they made to resell?
Yeah, I mean, you can only work with what you have. So in those cases, if you're not getting anything that's produced externally, nobody giving you a receipt, you can keep your own record, whether that's entering it onto a spreadsheet or keeping a pen and paper log or even taking a picture. That's all going to be sufficient for your records. I mean, I think the IRS understands that lots of transactions happen at garage sales and other places like that where you don't get that more official type of documentation. So it's really not as big of a deal as some people think.
Then we talked to the second one, tracking your income and expenses. What's the third one?
So the third one is to be aware of your estimated tax payments that you might owe. So first you have to know what estimated tax payments are and how often you should make them, and if you're even required to make them, because not everybody is. But I mean, most of us are familiar with working some kind of W-2 job where we get a paycheck and we see that there's federal income tax withholding on that paycheck. So our employer basically withholds or takes out money from what they're paying us, and they remit that to the government throughout the year on our behalf. So then when we start reselling or become self-employed, all of a sudden we're making income, but nobody's paying tax throughout the year on that income for us. So it's our responsibility to make those payments if we're required to. So I mean, the main rule of thumb is if you're going to owe over $1,000 at the end of the year, the IRS wants you to pay that throughout the year in the form of quarterly tax payments.
Yeah. If I have a full-time job and I'm paying, I'm doing reselling on the side and I'm being taxed as my full-time job as a W-2 employee, like, do I need to be paying quarterly taxes?
It depends. So a lot of people over withhold on their job wages, which means the employer is taking out more than the employee is actually going to owe. That's why we get refunds at the end of the year a lot of times. So then you start reselling and generating income there. So it could be that the tax that's going to be due from your reselling income can be covered by the taxes withheld through your day job that you otherwise would have gotten a refund for. So that refund is now going to go toward paying the reselling taxes, but only if you're having enough withheld through the day job. If you're not, you can either choose to make those manual estimated tax payments where you go onto the IRS website and make that payment, or you can just indicate to your employer to withhold more. So that's a pretty simple way to do it. So if you do have a day job or a W-2 job, that's what I might do.
If somebody was trying to figure out whether they should be making estimated quarterly payments or not, like what's your recommendation there?
I would estimate how much tax you're going to owe at the end of the year. And there are pretty simple online calculators online that you can use to do that. And you also have to factor in your day job, how much you're going to have withheld for the year through your day job, and then basically see what the gap is. Are you going to have any left over that you're still going to owe? And if that's more than $1,000, then you probably need to make estimated tax payments. So there are exceptions to that, and that is if you've already paid in the current year an amount equal to your tax liability from the prior year, then the IRS says that you don't have to make any more payments. That doesn't mean that you won't owe tax. It just means they're not going to penalize you for not paying those early or before tax time.
Makes sense. Yeah, I'm doing quarterly taxes for the first time this past year, and I was like dreading it, but it's like super easy. It's really not a big deal at all. It's just, you just have to be diligent in setting aside the money and then making the payments on a quarterly basis. Which brings me up, I'm curious, like, is there a good rule of thumb for how much you should be setting aside in taxes?
It's going to vary depending on the person. I mean, and I actually just made a video about this. There's kind of a rule of thumb that says you should set aside about 30% or a third. And it's easy to see where that comes from, but that's not going to be true for everybody. But if you want a good conservative, super simple rule, you could start with a third. For most people, it'd be less than that. For some people, it'd be more. But when you are self-employed or the IRS considers you to be a sole proprietor by default, or if you're an LLC or in a partnership, your profits are subject to not only income tax, but also self-employment tax. And that self-employment tax piece is 15% of your profit. So at a minimum, you should be setting aside 15% for that self-employment tax. And then you're going to have another 5, 10, 15% layered on there for the income tax. And that piece just depends on your total income, because that determines what tax bracket you're in. So that's 15 plus 5, 15 plus 10, or 15, 30. So that's kind of where that comes from.
Yeah. So if you're, generally speaking, if you're generating income entirely through reselling, you should expect that 15% self-employment tax as a bare minimum. And then depending on how much income you generate, you would then set aside an additional percentage based on where you would fall in that tax bracket. Is that right?
Exactly. Yep.
We've talked through 3: separating banking activity, tracking your income and expenses, and estimating tax payments. Let's talk about having the right business structure. So what does that mean, and why do you need to have the right business structure?
Yeah, so you are a sole proprietor by default. So a sole proprietorship is a type of business entity. It's basically like you are the business, you personally. And usually the next step that makes sense for a small business owner is going to be an LLC. So that's a limited liability company. You get liability protection. You might have access to additional banks or vendors who otherwise might not work with you. And the reason I like it is because it can be a stepping stone to what's typically the next step in that progression, which would be an S corp or S corporation. So those are 3 types of entities. You could be a multi-member LLC. You could be a C corporation. So there are various entity types. And when a lot of people are starting out with self-employment, they don't know anything about any of those. So it's like, what should I do? Or a lot of people think that they need to form an LLC immediately or an S corp immediately. I mean, I've talked to dozens of people and clients who have been in that boat where they're like, oh, my friend or my old CPA or my brother-in-law or whoever said I really needed to become an LLC or an S corp. And I mean, With the S Corp, you really shouldn't even consider that until you're making over $40,000 of profit annually. But some people jump in with that just starting out. And if they're in California, all of a sudden they're paying $800 a month for the annual California franchise tax fee, and they're having to file a separate tax return, and they're having to do payroll and all this stuff that really they shouldn't be doing because they're not yet at a place where they can realize the tax savings that some people can from an S Corp. So, I mean, all that is to say, just learn about the basic entity structures. And I mean, I have simple videos on those. It's not hard to go out and find which one will be right for you. Learn about those and determine which one is right for where you are right now. And don't feel like it's super urgent to jump to the next thing. There's nothing wrong with being a sole proprietor, which again is what you are by default.
How much of it is dependent on where you live? Is it, state by state? Would you make a different decision depending on which state you live in? It sounds like you were talking about some fees that come with being in California specifically. Like, is that universal to all states, or how do you advise your clients like that depending on where they live?
The state definitely does come into play. Generally, it's going to be similar for most states, but like there's I don't know, a handful of states where an S Corp isn't quite as attractive because those states tax the S Corp directly. Generally, it's not taxed directly, but yeah, like for an LLC, for instance, that's typically the next thing you go to after a sole proprietorship. Every state, I think, has annual filing fees because you have to like refile, re-register the LLC. In California, theirs is called a franchise tax fee, and they charge a minimum of $800. They're the most expensive. Some states, I think Texas doesn't charge you at all after the initial fee. Anyway, yeah, that'll vary. But yeah, definitely depending on what state you're in, you'll want to take that into consideration to guide your decision on whether you should take that LLC step or whether you should take that S Corp step.
Yeah, when I was getting started out, I didn't do anything at all for many years. And when I wanted to start taking this business seriously, I decided to establish an LLC. I did that honestly less because I thought that was the right thing to do financially or from an accounting perspective or legal perspective, but I did it more because it made things feel more official. And that just put me in the right mindset for success. It helped me treat things more like a business than it would have if I just had no entity at all. But I did find out that just having an LLC, and mine's in Missouri, and so there's Missouri specific laws, I'm sure, but even having an LLC just required a certain level of effort to maintain it that I didn't really know did require. Like, eBay collects all of my sales tax for me and remits it to the states, but I still have to tell Missouri every year that I collected no sales tax, and just various small things like that I'm guessing are dependent on individual states that would help you decide whether or not you need to take that on. It's hard to give blanket answers that are applicable to everyone. But if you're just an individual with sole proprietorship, meaning you haven't done anything, you're just out there selling and getting money from eBay, like, how do you know whether you should even invest the time to research whether you should establish an LLC? Like, is there an income level that you think, okay, if you're making now more than X amount, it's a good idea to do it? Is there another trigger that means you would advise a client to do that?
That's a good question, because a lot of people think if they form an LLC, they're going to save a lot on taxes, but that's kind of one of the myths that's out there, because an LLC is actually pretty much the exact same as a sole proprietorship from an income tax filing standpoint. So you file on the same exact form on your individual tax return if you're a single member LLC. So tax-wise, it's not really going to help you. As far as, investing the time learning about it, like I have a video out there, it's probably 5 to 7 minutes, and I go through the 4 reasons, my top 4 reasons to form an LLC. And I think I mentioned 3 of them, and you mentioned the 4th, and that's just like that it can increase the overall perception of your legitimacy. You feel more official, and that can be motivating.
Yeah.
So it doesn't take a ton of time to get like a baseline education to set you up for success. You don't have to be an expert. It's just about exposing yourself to those, foundational concepts out there. And then when you come up against a problem again, you can be like, oh, I think I watched a video on this, or I heard something about this once, and then you can go back and reference whatever that content was. But that's what keeps a lot of people from growing or moving forward, is just the anxiety or being intimidated about all the information that's out there. But as long as you can find a reputable source and someone who explains it correctly and well, then that can help a lot.
think it's another big myth in business or entrepreneurship is that you have to have all that stuff figured out before you get started. The reality is nobody knows before they get started. You really just need to dive in and trust that you will figure it out along the way. Because it's just, if you are stuck trying to have the answer for everything, you'll just never move forward anywhere. That's not to say you should be risky, but don't feel like you have to have everything figured out. Jump in there, get it done, and trust that the answers to your questions will arise naturally as you progress through your business. So we've talked about separating your banking activity, keeping it separate from personal. We've talked about tracking your income and expenses. We've talked about making estimated tax payments throughout the year, having the right business structure. What's the last of the 5 steps that you advise resellers take?
The last one is just to review your business activity with an expert.
Yeah.
And that could be an attorney, that could be a CPA, or like I said, that could be someone who's been around the block, who you trust, who's business savvy, who's been successful. I talk to people all the time who may have researched some things. They might not know anything. They might be overwhelmed with what they have read or what they haven't read. But then after talking to me a lot of times, even though we only talk for 20 or 30 minutes, and I might be telling them stuff they've already read or heard, they come away just saying like, oh my gosh, it's so much simpler than I thought.
Yeah.
Like, I guess I just needed to talk to somebody to, confirm what I have learned or just to tell me how to do it, where to get started. But it really is a lot simpler than most people think. So I think that's one of the big takeaways.
It can be intimidating. I mean, when there's accounting involved and numbers and math, it makes it feel like things need to be done in a very specific way. And that's not to say that there aren't very specific ways to do this, but I've learned this from you, Mark. You and I have collaborated on the Flipwise tax report and income statement, and you've helped advise us to make sure that we're sort of designing that and building that in the right ways. And one thing I came away from that exercise was that often it can be a little bit more of an art than a science. And obviously it's rooted in science and math, but what I've learned from you is there's often many different ways to achieve a desired outcome, and no one way is always the best way. And could you talk a little bit about that, kind of the art of accounting and the art of tax filing?
Yeah, I mean, there are some things that are pretty black and white, but then as your tax situation becomes more complex, it can introduce a lot of gray area. Your W-2 that you get from your employer, like the box 1 income, basically is what it is. That's not really a gray area, unless your employer messed up on that. But every significant life event you have usually has some type of tax implication, whether that's getting married or divorced or having a baby, a child turning 17 or going to college or starting a business, getting a rental. Like, there's so many things, and each one of those adds an additional layer of complexity to your tax situation, to your tax return, and how all those things interact sometimes creates a gray area, and there might not be a lot of precedent for it. So you just have to do the research you can and make a call. Yeah. They're not super gray with a lot of the reseller tax returns that I do, but yeah, there's always some things that I would consider a bit of an art.
Yeah. I guess when you and I sat down to sort of figure out how all of that tax report should work and income statement should work, I was sort of expecting you to be very rigorous and like, this is how it should work. No, and not that way, not this way. But a lot of your answers were more like, yes, that would make sense. This would also work if you did this or that. And I think, because it's accounting and because it's math based, you sort of go into it with the expectation that there's going to be just like one right way to do everything, which is not the case. There's many different ways that you can get things done. Yeah,
and it's just like on the IRS Schedule C, which is the form that all sole proprietors will use to enter their income and expenses on their tax return. I just don't feel like it's that good of a form. Like, most of the fields or boxes on there don't, or half of them I feel like don't even apply to resellers. It's like most of the expenses you have are listed separately in the other box. So it's like it's not really built to fit us super nicely.
Yeah, I suppose it would be difficult to have a set of categories that were universal to every industry out there.
Yeah, but I mean, you guys are practicing what you preach. Like you just said, you don't wait to get started just because you don't know everything. Like, you have been, Flipwise has been live for a while now, but you're still working on enhancements and adding things and making stuff better, and it's already benefiting people. So that's just an example of getting started.
Flipwise members ask this all the time. I probably get asked once a day from our Flipwise members, like, what do I put for the cost of goods for a personal item that I'm selling or something that I've inherited or I have no money into it? Do I put zero? Do I put the original price that I paid? Like, how do you handle that situation?
Yeah, I mean, that's a good question. And that's how a lot of people get started with reselling is it's like, oh, I got this stuff in my closet. Let me see how much I can get for it on eBay. And then they see how easy it was, and they're like, I'm going to sell some more stuff till they go out sourcing on their own. But then the question is, okay, well, do I get a deduction for this item? Like, how much is that deduction? And that's a great example of the art piece, because the IRS says that, if you contribute some item to your business and then sell it to determine the cost value or the basis of that item, you should use the lower of the original cost or the market value. Then the next question is, okay, great. But first of all, I don't remember what I originally paid for it. I don't know that original cost. And second, like, how do I determine the market value? That's going to be pretty subjective because you might find that item selling in various places around the internet or the world. And it's a whole range of prices. So like, which of those prices represents the market value? Sometimes I say, well, like, take the midpoint and, call it that. Because if you're just putting the market value as your cost for everything, the IRS isn't going to like that, because then you're basically deducting the whole thing when you sell it, and they don't get any tax revenue from that. So that's kind of an aggressive position. So typically, unless it's something that has significantly depreciated in value, I go with your best estimate of the original cost, because you're probably not going to have those receipts or a great record from 15 years ago or whatever.
Well, does that apply to like stuff that you get for free as well? Let's say that a friend just gave you some stuff, that like you didn't incur any costs to acquire that inventory. Should you be putting free as the acquisition cost? Should you be putting the fair market value for that or the current market value?
If they gave it to you, like your business specifically to sell it, because they're like, oh, I know Justin sells stuff, I'm going to give him this item. Yeah, I would put the cost as zero, like really no deduction for that. If they gave it to you like personally, or if you inherited something from somebody, you inherit that person's basis. So that means if that person paid $20 for it and they give it to you as a person, it's as if you paid $20 for it, and then you can turn around and contribute that to your business as business inventory. And that's a case in which the deduction would be that $20. I've thrown that out to other CPAs and everybody's like, what are you talking about? Like, it's not really something that the IRS has guidance on or that other CPAs have thought about, but that's my position right now.
All right, we're going to play a little game called Is Justin Committing Tax Fraud?
Nice.
Which is when I have my own personal items that I, who knows, I bought years ago and I don't use them anymore and I'm just going to sell them. What I end up doing is just putting the cost of goods as zero, but then when it sells, I adjust the cost of goods to equal the net return so that it basically zeroes it out. So I didn't make any money and I didn't lose any money on it. Is that an effective way to handle that situation? By the way, that's assuming that there's pretty much no way that the value has gone up since I bought it. This is all stuff that has depreciated to some degree over time. So is that a safe way to handle the situation?
I mean, I don't think you'll get in trouble if we're not talking super high dollar items. It might be on the aggressive side. I'm not sure.
Well, by the way, if your answer is yes, I'm not going to be putting this in the video.
Yeah, I mean, I think, it just depends. Like, what is the true market value of that item?
Yeah.
And is that market value lower than what you originally paid for it? Because the IRS wants you to take whichever is lower.
Yeah. And it really depends on what it sold for, because it could be that it sold for an amount that it produced a net return at a zero cost of goods that's higher than the fair market value, for example, and therefore you shouldn't be doing that. So that makes sense. You probably should be a little bit more specific about it, and of course that's what I will be doing, is be more specific about it and ensure that I'm checking that closely, because I don't want to commit tax fraud. I want to do things the right way.
Yeah, it's not. I mean, if you're not intentionally like trying to deceive the IRS, it's not considered fraud. Like innocent mistakes are not considered fraudulent.
Tax fraud's when you're on purpose trying to skirt past the laws of the IRS. So
Yep.
it's a good point. It's okay to make mistakes. That's another just good tenet in general, is that you probably are making mistakes. And, if you were to get audited, likely they're going to find some problems because people make mistakes, and that doesn't mean that you're a criminal, I hope.
Yeah. And people legitimately worry about if they're going to go to jail for committing minor mistakes. And there's a lot of unnecessary worry. Like if the IRS sees something that they think might be wrong, they're going to send you a letter and give you a chance to correct it.
So tell me about this tax academy that you run. What exactly is this?
I have a online course called Reseller Tax Academy, and it's go at your own pace. And it dives into a lot of these things we've been talking about, estimated taxes, what type of entity you should have, talk about sales tax, self-employment tax, getting audited, like all this stuff. It's just a really good foundation for beginners, people who are just getting started, or even people who have been doing this for a few years. And really the goal is just to help you get that baseline education and to reduce the anxiety. I only open it and or run a promotion on it every January. And then there's a separate, really affordable membership I have called Financial Insiders, where we do monthly live video calls. We do like a monthly video thing where I give customized video responses. And then we have a private Facebook group where I respond to everything. So that is an additional help for people who are going through the course. If you have additional questions, go to my website, notyourdadscpa.com. I'm trying to be more active on YouTube these days, Not Your Dad's CPA.
All right, Mark, thank you so much for joining me and helping folks out with their taxes here. Like Mark said, you can find more information about his Reseller Tax Academy at his website, notyourdadscpa.com. And if you're sick of using spreadsheets to manage your reselling business, check out the eBay automation platform we've been talking about called Flipwise. It automates the collection of all the data you need to be tax ready for your eBay business. So look for a link in the description below, along with a promo code for 20% off your first month. And if you're still hungry for more, check out this deep dive video I did on the eBay algorithm, which will help you understand exactly what it is, what it isn't, how it works, and what you need to do to make sure your listings are getting the attention they deserve. Thanks so much for watching, and we'll see you next time.